Hi guys, and welcome back to another video of me, Connor. Today we're going through the trades that we went through last week in the weekly watch list, and then going through the trades that we're looking at for this week. Starting off, we're going to go through some of the trades that we went through last week and that I managed to catch, and then some of the ones I didn't catch but were given out in the videos and played it to perfection. So firstly, if we look here, we can see that we've got oil, gold, USDJPY, Euro CAD, CAD JPY, CAD Swiss, and a USD CAD. These were a number of trades that were covered in the video. There was some more as well, however these are the ones that I identified when doing this week's video. So as you can see, we actually caught 700 pips on oil, which is one that I was actually in. Gold I didn't manage to catch, but that was 1,000 pips. USD JPY is currently at 360 pips. I caught that. Euro CAD 370 pips. I didn't quite completely catch that. However, I did catch some pips. CAD JPY reached 300 pips. CAD Swiss reached 340 pips. Unluckily, I got out early of that one due to some news. However, I did catch pips on that. And USD CAD was 100 pips, which I think I caught about 60 or 70. There was also Australian dollar CAD, which I think was around 100 pips as well. And I caught that one as well. So now what we'll do is we're just going to quickly look at oil and USDJPY. Start off just to sort of look at how we've got on since last week. So as we can see on the daily time frame, we can see that we've got this risk reward calculator or indicator. You can see that the entry was the 48.31, and then the target region was the 40.85, and you can see that within the last few days of last week this played out perfectly after getting our entry, and now we're looking at and sitting at around 700 pips profit. So running really nicely, and we've had further news today. So if we switch over to Bloomberg. Okay guys, so if we just switch over to Bloomberg, we can see that the Saudi are planning a big oil output hike, beginning oil output price war. So what this basically means is they're going to be looking at increasing the supply of oil, which basically, for anyone who doesn't do economics, means that when you increase the supply of something, it makes it less valuable because if there's more people have the chance to get their hands on it. So for example, something very exclusive, say maybe a new pair of trainers that have been launched, if there's 1 million people who want it but there's only 1,000 pairs, that makes a very limited edition, and therefore the price is going to shoot up. So if you increase the supply, then the price goes down because they're not as rare. So it's the same with oil. So Saudi Arabia, obviously a massive producer of oil, are going to produce more. That means that the price is going to shoot down. So obviously what this does for us is this is perfect, because this is actually going with our trade, because it's going to decrease the price further. So we are approaching our target region, but obviously after this news coming out this weekend, I am anticipating that we're going to probably come through this take profit with a gap tonight. I'm probably expecting a gap to maybe even be around $40 a barrel, and then of course if we do sort of hit the take profit, I'll be looking to get back into the trade when there's a good opportunity. But of course, looking at the trade we are in, then it has been around 700 pips, and then what we'll do is we'll just sort of start off by looking at oil specifically, and then we'll go on to the rest of the pairs I'll be covering. I'll also be covering USDJPY, which is the other pair I focused on this week. So as you can see, the weekly candle, we absolutely smashed it with our analysis. We got a really nice wick entry, and prices shot down massively, and then come through that trend line that we did discuss last week, and of course we have come through them high lows that we had discussed as well. So now we're sort of sitting around the 40.85 after some small correction after Friday. Of course, people taking out their profits before the weekend. Of course, banks normally have to be set, have to be clean and don't have any trades running, and then it's also the case for a lot of funds as well, which means obviously a lot of correction that occurs because of course people are withdrawing their profits for the weekend. So obviously going on to the daily, as we did see before, we obviously have now sort of nearly reached that minus 27%, but I do anticipate we're going to go further. So obviously our minus 61.8 is sitting at 37.18, but obviously if we look on our weekly time frame, we can see the next target regions that I will be looking at. So firstly, we have this level here. So this is the 39.2 level, just slightly adjust that, and then also we have the 35.28 level as well. So really, we're probably anticipating that price is going to, within the next few months, it's going to come down massively. As you can see, we have now closed below that previous weekly low of around 42. 42 roughly, or 42.4 roughly, and now we're sort of looking to coming at 39.2 or 35.28 even. So a huge couple of months for oil, and obviously it's been so impulsive the last few weeks that it's very interesting to see how far we're going to go with this one. And personally for me, it's absolutely great that I was able to share this in the YouTube video and obviously on my Instagram as well as with our community that I'm within and where I learn to trade. So then obviously looking onto the daily, obviously we can see that where next target is the 39.2 after we reach this target profit, which I think we're definitely going to reach now. But we have obviously closed below the candlestick body, closed below that liquidity area, so that's absolutely perfect because that tells us that there is enough momentum to beat the liquidity and where typically price reversed before. So we definitely are going to see some more downside potential on this pair, in my opinion. The next one we're going to look at is the DXY, just purely because of, as we know, the DXY is our dollar index, and it normally tells us where the dollar is going to go. So you might remember a couple of videos me ago, I was talking about the 99.92 being the last major high and the new sort of current high the price is having over the last few weeks or months. However, since that point, we found the price couldn't push up any higher, and rather than just retrace it slightly, it's just completely turned bearish. So prices now broke the weekly 50 EMA. And now we're seeing sort of this massive reversal that's happening, and now we've created a new low at 95.70. So we are looking very bearish on the DXY and on the dollar, which we've seen in multiple pairs this week. And of course, some of the pairs that we looked at in our watch list have played out very well. So of course, with the weekly bearish engulfing, and now we've had another massive candlestick, there's a lot of bearish pressure on this pair. However, or on this index. Of course, we do have a significant currency level of 96, which price hasn't closed below with a candlestick body close. So there could be a chance we could reverse from this level. However, I am anticipating further dollar weakness this week. So now if we go into the daily, we can just have a look. The price has broken back into this channel. And of course, there is some liquidity here, so that might be why price sort of has come up. However, we have closed sort of at 96.09, so not too far at all. And I'm anticipating we are going to break this. So we might see a small retracement. If we go to the 4 hour, we can see that we have got sort of this previous high marked out, so the previous low. Of course, we've got this sort of A, B, C, D formation, so we can move our Fibonacci to now suit the new sequence that could happen, which would be A, B, C, D. If you're not quite sure on that, I am releasing a new video soon. I am hopefully going to get it out this week. It's going to basically just be a simple video going through market structure, Fibonacci, and how to identify highs and lows. And it should really help for those guys who don't really understand some of the stuff that I go through, as I know it can be a little bit complicated and overwhelming at first. But yeah, so basically with this, I'm looking for us to retrace to sort of the 38.2, which is around the 96.42 region, and then reverse from this region. So you can see here we've got the price obviously to retrace to 38.2. As I said, we've got some market structure. So if we go back into the daily, you can just see that we have got market structure at this level here. So as you can see, we've got sort of multiple wicks across. Going back into the 4 hour, you can see that we have also got the 1 hour 50 EMA. So if we look on here, we can see the 38.2 in this market structure here. The 1 hour 50 EMA is now sort of slowly approaching this level, and obviously with the average being the average, it will slowly start to come down to this level, and you can see that price is slowly creating almost a flag formation. So maybe we might see this flag formation come further, or we might even reverse before that point. So now we're just going to look at gold. So of course, gold is sort of the massive one for the week that unfortunately I wasn't able to catch, as I caught oil first, and I did completely miss this trade, if I'm honest, which is sort of annoying because obviously it's 1,000 pips, but in my eyes, if you miss a trade but you analysed it correctly, it's no problem because there's always going to be more trades around the corner. However, if a trade doesn't go your way and you lose, then of course it's a loss you have to take. So I'd rather take a win in terms of my analysis than having to force a trade or catch a trade that might have not gone my way. So now what we're going to do is just jump on the weekly. You can see that price has equaled the previous high. However, with the candlestick body not closing above, we can't count it as a new major high. So therefore, I am anticipating price will come up higher, especially when the dollar weakness. But at the moment, we have just equaled the high and we haven't made a new high. So that last major high of 1689.660 is still remaining. And then, of course, we go down to the daily, we can just see that, as I predicted in my last video, that the price has reversed from the 88% fib and it's now equal to previous high. So of course it was a really nice move. So we could have caught it down here, or even from this sort of market structure region here, and then you could have reversed from this sort of 1580 level up to the current levels around 1689. Was the higher that it equaled, and then obviously right now it's around 1674. So a massive amount of pips for anyone who caught that. So if you did catch that, please let me know. There's obviously some massive amount of pips, and I'm glad I could have helped you guys. So if we just go on to the 4 hour, we can just look at what I'm anticipating. So we've got this trend line formed here, and what we're looking for is price to sort of retrace, which it sort of has really when we look at it. It's retraced all of this 50 with this big wick, 50%, and of course the 4 hour 50 MA, but obviously closed above, so sort of a massive wick, so sort of couple hundred pips almost within that 4 hour period, and then we're still pushing up. So now I'm anticipating the price will probably stay above this trend line and now push up to the 1700 level, or even almost the minus 27% at 1718.446. So I think we'll definitely see some more bullish pressure on gold. However, we do just have to be aware that we did close below. So we are retracing a little bit, so we have to make sure to get that entry spot on. Okay, so now we're going to move on to the actual watch list that we're going to be looking at. And the first pair we're going to be looking at is the Australian dollar versus the yen. So when we're looking at the Australian dollar yen, what we're going to do is always we start off on the weekly. Of course, we looked at the monthly timeframes last week. So looking at the weekly, we can see that across most of the yen pairs as well, we've seen sort of massive strength, but also across against the sort of Australian dollar has been massive weakness. So when we look at this, we can see that price broke out of a bearish flag. Then we had another sort of series of correction, and now we've had a massive impulsive candle. So the week before, or what I would have covered last week, and then we've had another sort of bearish week, but price didn't sort of break that last major low, break above that last major low. So now if we look onto the daily, we can just see that price has broken above that last major low, and stayed above. However, what we're looking at is we're still looking at a bearish formation because of its retraced this 38.2, and now it's reversed from this level. And although the candlestick body closes above 69.943, I'm still anticipating that price is going to sort of come through this level and come even further, with such Australian dollar weakness as such Japanese yen strength. So I'm looking for price to sort of break below that last major low, close below, and then go down to our 68.01, which is our minus 27 level. And if you look on the 4 hour, we can see a little bit clearer, with obviously the bearish flag that was formed and how you could have got in, and then of course this sort of rounded off formation. So I'm anticipating that we're going to be able to either get price to come up to sort of our golden pocket region at 71% or 78.6% and the 4 hour 50 MA, or we do have some structure at this region here with some market structure with the 38.2% fib, or we might reverse from it as well. So either one of these sort of areas is key to look at, and we might see price reverse to sort of or sort of reverse on the lower time frames, but of course continue on the higher time frames and continue this bearish structure. So now we're just going to look at the Australian dollar, New Zealand dollar. So quite interesting is I personally feel for this week we're going to see continued Australian dollar weakness, but also New Zealand dollar strength. So when we're looking at this, we can see that price has tested the weekly 50 MA, but was not strong enough to break above or even sort of sustain the bullish power that it had. So we've now sort of got this massive wick, which sort of identifies that the Australian dollar has been quite weak, and of course it's continued that weakness. And you've seen for the last few weeks it's struggled to sort of make any real bullish power and sustain that. So now when we look at the daily, we can just see that looking at our fib, we've got this high here and a low here. We are sort of reversing around that 38.2% level. So of course reversing from this level, but now approaching that daily 50 MA. Now you can see we've had that wick along with market structure. So when we go into the 4 hour, you'll see that I'm looking at a slightly different view as well. However, this would be my favorite view, that we're sort of reversing from this level. We will most likely break through this daily 50 MA and then hopefully this market structure, and then continue this downside potential, because as I've said, I'm looking at New Zealand dollar strength especially. And then if we go into the 4 hour, we can just see that the other way I'm looking at it, and it's always important to look at the probable versus the possible, is that we might be having sort of this reversal because we broke out of the trend. However, I believe this will be a fake out, but to look at the other way, we have broke out, we've now retraced 71%, and now we're extending from this level. However, we are below the 4-hour 50 EMA. So unless we break above that 4-hour 50 EMA and start making some real movement up, I probably wouldn't take the trade, any long trades, but the shorts I would definitely be looking to take. Of course, with the entity strength and the Australian dollar weakness, they are in fact very, very well correlated. So it can be quite slow for this pair if one's very strong and one's very weak. They might sort of start to consolidate a little bit, or we might just see that the NZD is going to sort of come through, and then of course the Australian dollar and New Zealand dollar as a pair will sort of be very bearish. So that's my thoughts on that one for next week. Now if we just move on to the Australian dollar US dollar, so obviously continuing that, both are very, very weak currency pairs right now. Also a very weak set of currencies right now, and obviously a weak currency pair overall, so we might not see too much movement. However, we've seen that price has been very bullish this week, and it broke out of the lows and broke out the liquidity zone, and it's now approaching that significant 0.67 level, where we do have market structure, the 38.2% fib. So when we go onto the lower time frame, such as the daily, you'll see that we didn't quite break above that last major high, which is important because of this means that we're still looking pretty bearish at the moment, and we might reverse from this level. And of course, with our confluences, as we can see here, we've got the 0.67 resistance, which is here, the market structure, which is here, the daily 50 EMA, which is sitting just above this region, and then of course the weak Australian dollar, as we know, and then of course we haven't broke above this last major high, so it's acting as resistance. So I'm personally thinking Australian dollar, US dollar, we might actually see become bearish. However, with both pairs being very weak, I personally wouldn't be too hasty to take this trade, but it's definitely one to look at and just see how it develops over the week. But my overall bias would most likely be shorts on this pair. Now we're going to look at the euro against the Australian dollar. So this has been a very, very sort of bullish pair the last few weeks. As you can see, we've had this huge bullish engulfing last week, and in the week just gone, we've had sort of a big retest of this last major highs we anticipated, and now it's in price push above. So now if we just go onto the daily, what we can see is that price is now broke obviously above that last major high. It's now retested it successfully, and now it's pushed back up with a bullish engulfing candlestick. So now what we're looking for is price to sort of continue on to the minus 27% fib, which is at 1.740026, and of course continue that bullish pressure. With this as well, obviously the euro has been very strong and the Australian dollar has been very weak, so once again it's quite a nice pair to trade because of course you've got that strength versus that weakness, so that there will be some movement and liquidity in that pair. So now if we just go onto the 4 hour, we can just see that price has obviously formed this trend line, and then we've got a test, and then what we're looking for is price to just come down for another test of this, and then of course if we just want to quickly plot our fibs, we can see from the last major low, so last higher low to the high, we can see that we've got around 61.8, and then I believe we'd have the 71 as well sitting quite nicely within this level. So one of these two levels, I feel like we will retrace to one of these levels and then continue upwards. So 61.8 and the 71% market structure, and of course the 4-hour 50 EMA sitting just below, and then potentially the 1-hour 50 EMA is obviously acting as resistance right now, so we might as support, sorry, and we might see it go through that and then come back above in the future. So for Euro Australian dollar, my bias is long. We're just going to see a small correction, and then maybe say 70-80 pips, and then we're going to look to take the long further. Next we've got Euro CAD, another pair that I predicted last week, and we did manage to get 370 pips on, if anyone caught that. So as you can see, we've now made this new high. We broke out of the structure that we had before, and the descending trend line, and also we sort of followed on from that move in weekly morning star formation. So we broke through that weekly 50 EMA, we retested it successfully, made this huge bullish candle, made this new high within this region of structure, and then of course sort of with the Canadian dollar being so weak from oil, as we discussed before, it's no surprise that Euro CAD has been very bullish this week. And as you can see, this is what we sort of roughly predicted. This was the average from last week, so I can get rid of these now. But you can see that we did actually sustain that 1.50496 and even go further to make that new high. So now what we're anticipating is sort of to have a retracement. So as you can see, that new recent high, and of course if we go into the 4 hour, we can see that we have got these levels here. So we've got an area of market structure, and also the 23.6% fib, which would be our favoured region. We can see that the hour 50 EMA is sort of near that level as well, so that's another form of confluence. And then of course we've got this trend line and then the 38.2% fib, which lines up nicely with the trend line. So for me, we're just looking for a small retracement, and then we might even see a gap tonight to sort of skip the Fibonacci, and even start to move higher. But definitely looking at longs for this week for this pair, to continue where we left off from last week and sort of add to them 370 pips and break above this most recent high of 1.52471. So the next pair we're going to look at is the pound US dollar. This is the only pair for me that went completely against what I was looking at. I think USD Swiss was slightly different to what I looked at, but I was aware of both possibilities. So if we look at the pound US dollar, you can see that this week we did have a massive bullish engulfing candlestick, which broke above the weekly 50 MA, broke above market structure, and also broke above the monthly resistance, which is now support of 1.300. So obviously last week that was one of our confluences. So we've now faked out of that weekly 50 MA and faked out of that 1.300 and made this new sort of high. So now if we go onto the daily, we can just see that with this high sitting here, if we just adjust it slightly, we can see that price is now sitting at 1.30553 is the high, and then sort of just 10 pips below that is where price currently is at. So even above the daily 50 MA as well, above that monthly support as we said, and of course you can see we did break out of that descending trend line which we used as confluence last week. So I did actually take a loss on this pair. I think it was around 60 to 70 pips, but of course risk managed, and of course my wins were a lot bigger than my losses, which is always important to make sure your risk is always less than your reward. So for example, a risk reward of 1 to 4. If you have a strategy in the long run, you should work out much better. So of course with this, we're now looking onto the 4 hour to see and change our bias to take longs. It's always important to switch your bias. Don't just have a bias because if that's what you thought the week before. It's always important to be fluid. The market owes you nothing. So the price is above the monthly support of 1.3. The price is also now broke above the 4 hour 50 MA. The price is broke above the descending trend line as we said and made this new high. It's also now we're looking to sort of get that small retracement to the 23.6 and market structure. Of course, with this, we're now sort of looking for prices to come back down to that 1.3 and maybe retest it. It's good to have a small retest here, but we'd like to see some correction and slowly come down and then into the sort of these 3 areas of confluence here, and then potentially take longs up to say the minus 27 at 1.31314, and then potentially higher, because of course if we go back into daily, you can see that there is a lot of potential for this pair if we do break higher. And of course with the pound being so weak in the last few months and the dollar now being very weak, it's starting to recover from where it's been in recent times. So now if we go on to the next pair we're going to look at, which is the US dollar, Euro US dollar, which is we know is very well correlated with our DXY inversely. We can see that Euro US dollar also made a new high this week, and broke out of the trend it had, and like EuroCAD, it's extended from that morning star formation. And of course, Morningstar being reversal formation, it's no surprise. So we've now broke above that 1.1 level successfully, broke above structure, broke above the weekly 50 MA. Going on to the daily, you can see that we've now formed this trend line. We'll move this onto the 4 hour so it's a little bit clearer when we go on to that. But of course it's important because we've now also broken above this daily 50 MA, and broke above these key levels as we said. We've also broke above the 1.111 level, which I find a very good level for me, a good form of support and resistance. We've now sort of broke into the structure, so now looking on the 4 hour just to retrace to this trend line, market structure, the 1 hour 50 EMA and the 4 hour time, the 4 hour trend line. So if we go into the 1 hour, you'll see that we do have the 50 EMA just perfectly on that 50% fib as well. So now we're just looking for a retracement down to here, another touch, and then we'll look to push higher onto the minus 27, which is around 1.14183, and then potentially minus 61.8 or 1.5, which would be a very significant level for price. And as you can see, the last sort of major high was 1.14, and then of this trend line we haven't had a touch since sort of these highs at 1.8 or 1.18, sorry, a long time ago. So very interesting to see where price could go in the future with such a strong euro and such a weak dollar at the moment. So now the next pair we're going to look at is New Zealand dollar, US dollar. So slightly different to Australian dollar, US dollar, which normally you wouldn't have separate prices on. For me, I do favour this New Zealand dollar strength and this US dollar weakness, as we said. And now we've had the New Zealand dollar, US dollar pairing break above that 0.63000 key psychological level for this price. And of course, it's sort of bounced off this last major low. And now if we go on to the daily, we can just see that it has also broke this trend line here. So of course breaking this trend line and then breaking above the 0.63 key level, as we said. The industry, the New Zealand dollar has obviously found some strength with the US dollar being so weak and where it was so low before. The 23 points, and then if we go on to the 4-hour, we can just see that we are looking for a small retracement as we've had that slowdown in price, looking for that 23.6% fib, the 4-hour 50 EMA, and of course market structure to take this long. So the minus 27 would be our 0.64215 and minus 61.8 being 0.64847, where we do have some additional structure. So for me, I'm looking to sort of use this reversal strategy, so break out of the trend line, make a new high, retrace, and then look for the extension in the future. And then the next pair we're going to look at is the US dollar versus Canadian dollar. Of course, this pair has been very good for us because we know that the US dollar has been very weak. However, with the massive weakness in oil, we've seen USD CAD sort of consolidate, but come slightly higher from where we was last week. So if we look on the weekly, we can see that we did sort of initially have a very bearish start, and then we looked to come below this most recent high, but of course without that sort of candlestick body formation on the weekly, we didn't have a confirmation, so there was no reason to change your bias to bearish. We can now see we've had this pin candle, and then now we're looking for that extension to sort of this top of this wedge, and break above this most recent high. So if we go onto the daily, we can just see that of course we've retraced sort of already to this 50%, and now we're breaking above. So now we're potentially going to look to break above the most recent high, or maybe we'll come down for another test of this trend line, and then we're looking to sort of go to the minus 27, which is at 1.35368, and then potentially the minus 61.8. But for me, I think USD CAD will continue to go higher. And then finally, the last pair we're going to look at. We're going to look at USD franc, US dollar against Swiss franc, and then we'll look at USDJPY, which is the other pair that I did take a trade in this week, and it's now running at sort of 300-400 pips. So looking at US dollar Swiss franc, of course, I was looking at sort of the bullish opportunities this week. However, we did see a continuation of the bearish momentum. So if we go into the daily, we can just see how we had that fake out, and of course this is where we was last week, and then we've now retraced that 50% fib, and now we've come down, made this new low. So what we're looking for now is price to sort of come down and just retrace to one of our favoured levels, so the 50% and the 38.2% at either side of the market structure that we have. So if we can just look at previous price action, we can see that there's market structure here. So at the start of the trend before, and then we can just see that we've got obviously the gold correlation. So obviously with the Swiss franc, there is a correlation because they have a lot of their reserves in gold. So this means that a lot of their currency is held in gold. So when gold increases, the Swiss franc increases because they hold a lot of gold. And of course, with this, if gold is looking for some correction, there's no surprise we're looking for some USD Swiss correction as well. So we're looking to come into this region, and also there is the 4-hour 50 EMA. So we go into the 4-hour, we can just see the 4-hour 50 EMA is coming into this zone now, and we're sort of looking for them to meet and then sort of bounce off the 4-hour 50 EMA and continue to the minus 27%, which if we go back into the daily is around the 0.91742, which goes nicely with our 0.91855 key level, and where the higher low was previously. So now the final pair we're going to look at is the USDJPY pairing. So this is another one I got a trade on this week, which you'll see here. So you can see that we caught it very nicely off of market structure and 23.6% fib. You can see the daily 50 mate is a long way away. However, we've been very impulsive in this, and I do anticipate this to come down to my target profit of 104.464, and equal that start of the previous trend and potentially come even lower with such yen strength and such dollar weakness. So once again, a perfect example of using that dollar weakness and then yen strength. So a very weak pair against a very weak currency against a very strong currency. So we've seen this now. I got in around 108.010, and it's now sunk down to 105, which it tapped, and then it come back up and retraced. So now if we look on the 4-hour, we can just see that we're looking for price to sort of retrace. So if we just change this fib, we can just plot from the high. So the last high after correction was here. Plot with 0 fib, and we're just looking for sort of any area for sort of correction. So probably most likely we'll probably see some correction, and then we'll meet that 4-hour 50 EMA, and then potentially continue. But for me, I think we might. I think although we will get to 104.464, I do anticipate further, but we have to be aware that most people will take their profit here. We might see a reversal of this level. But that's all from me this week. I will be looking at putting some new content out. I'm looking at getting that new laptop soon, so the video quality and sound quality will also be a lot better. But of course, we did sort of make a lot of pips last week, 2 to 3,000 pips, with all the trades that were on the video, and then of course, oil, I'm looking to continue massively, so I'll be updating everything on my Instagram. Of course, as always, like, subscribe, and comment. I appreciate everything. We're at 50, I think we reached 50 subscribers this week, which is massive. Sort of these small milestones, but hopefully in the future we'll have many more. But I'll make sure to put everything on Instagram and update you guys for the week, and I hope to see you guys on the next one. But make sure to leave a like, comment, and subscribe if you've not already, and also turn on that bell for notifications